Howdy there, folks. Welcome into today's video. Quite a few things to get into in this one here today, folks. First thing is I got a few very important charts I want to show you guys that back up throughout history. Because a lot of people are wondering, where's this market going? Where are we headed? Where have we been? What we're going through right now, has this happened in the past? And I saw some very important things I want to share with you out there that I'm not seeing shared out there enough, okay? And so that's going to help, I think, the people that are confident in the market and the people that are scared in this market right now, okay? Second thing we're going to get into is Palantir. They were in the news here today for many various things, actually. A big partnership they have, but then also Jim Cramer came out and absolutely trashed the stock here today. And I'm going to show you what Jim Cramer said about Palantir. It was pretty rough, okay? Let's say that this is called what it is. And we'll get into that. I'll share my opinion. Tesla, an analyst comes out and says there's a major drop in Tesla stock price. We'll run through kind of what they said, my opinion on that, okay? Some other big moves in some stocks out there. I want to talk about a major opportunity in an index I see out there, and that's going to be pretty shocking to show you guys what's going on there. And then at the end of this video, I'll kind of wrap it up, which is kind of talking to long-term investors and kind of getting everybody kind of focused on the right things and whatnot. So I appreciate everybody joining me as always. Thank you for being subscribed. I appreciate everybody here. And also, I put together a nice video for you guys around abundance mindset. I understand, like, especially over this past 12 to 18 months, it's been so much scarcity mentality out there. And I just referenced it at the very end of yesterday's video, and I told everybody, hey, if you want that video, DM me on Instagram. I received like hundreds of DMs from people that wanted that video, so it was like ridiculous. So basically, I'll just put his pinned comment down there. If you want the video, I'll basically email it over, text it over, depending upon how you want it, and I'll send it over to you that way. It's absolutely free to watch. I recorded a few nights ago. I thought it was just important to kind of keep everybody in a balanced mindset because, like I said, you go on social media, you go on anywhere over this past really like year, if not over a year, it's been really around scarcity mentality. So just a mindset switch there, okay? So first thing that we want to look at here, what you're looking at is a chart of the VIX basically in my entire lifetime, not just in the market, but my entire life in general pretty much, okay? And something very important I want to show you in regards to the VIX, okay? And this basically just measures how crazy the market is at a particular time, okay? The volatility in the market. This is extremely important. In the past, let's call it 30, 40 years in the market, we've had three extreme periods of volatility, okay? The first one was 1998 through 2002, an incredible amount of volatility in the market. You saw tech stocks go absolutely crazy 1998 into 99, right? And then a massive drop, and I mean epic drop in all the indexes and stocks in general, 2000, 2001, 2002, right? Then we went through a second major period of volatility. That was 2008 through 2011, the great financial crisis, okay? And then we've recently gone through another extreme period of volatility, 2020 through 2022. Now, it seems, at least in 2023, like that period of volatility is over, but we don't know. You never know. It could come back, okay? No different than 98 through 2002. You had a few periods where it seemed like, okay, the market's calm now, and then you had some huge spikes up again. Even in 08 through 2011, you got a few time periods when you look like, okay, VIX has calmed down, it's clear, let's call it skies ahead, and then next thing you know, we got a huge spike up in volatility. So right now we're getting the signs of like volatility's kind of ending here, and we're going to get into a more normalized market, but you can't, what they call it, count your chickens before they hatch or something like that, right? Now, these insane periods of volatility usually last 3 to 5 years. All right. And so 2020 through 2022 obviously fits that criteria. 08 through 2011 fits that criteria. 98 through 2002 fits that criteria in the market, right? Now, a lot of people are, let's call it what it is, okay? Michael Burry's like, what the heck is going on, okay? He even tweeted out this last week. Going back to the 1920s, there's been no buy the dip generation like you. Congratulations, right? Which it's been an incredible, basically after the tech bubble, starting in 2002, 2003, we just had an incredible mindset switch for the past 20 years or so into buy the dip, take advantage of opportunities in the market, right? And if I just showed you that, think about just I'm 33 years old, okay? I've already been through two massive volatility periods, right? I went through 08, 09 when I was getting in the market, which all lasted, as far as volatility went, it lasted all the way to 2011 and the double dip recession fears and everything like that, right? And I obviously have been through this most recent one, the 2020 through 2022 one, right? And so even somebody like myself has already been through two insane periods of volatility, right? One was the worst financial situation we had since the Great Depression. The other was a once in 100-year, let's call it what it is, a health event, okay, where the worldwide economy was shut down. And then we had crazy inflation with supply chains. So for a lot of us, we've been through so much now at this point in time that it's really hard to scare us. We've been desensitized. And so we don't walk around scared anymore. We just understand, like, we get good deals in the market, we're going to take advantage of those deals. And we buy the dip, right? And it's really hard to scare us. Previous generations, I think, were much easier to scare because maybe they hadn't been through some insane volatile markets, right? Maybe they didn't have as much information as we have nowadays, right? And so I think that's the real reason that it's so hard to scare us away from the market and say, oh yeah, oh gosh, this is going on. I'm selling out of everything and I'm just going to go hide in cash or something like that. Like we don't think like that, right? And if we're a little more educated than that, look at the past 25 years. This is shocking, okay? Absolutely shocking. The bottom line is, when it comes to great companies, every dip is just a massive, amazing buying opportunity in great companies, right? You go look at Amazon, Apple, Nvidia, AMD, like the NASDAQ in general, right? Just pull up the past 25 years. Every dip is a buy the dip opportunity. So you can say, well, maybe this time's different. Maybe, Amazon never comes back. Maybe Apple never comes back. Maybe the NASDAQ never comes back. Nvidia, whatever, right? But at the end of the day, I'm going to go on the side of optimism and that, brighter days will be ahead over the next 3, 5, 7 years and companies will do amazing and companies will prosper and we'll be just fine in this game, right? I'm not going to bet that, it's down and out from here because we've never seen that ever in human history. Never, okay? And so that's kind of my thought process around that. And I think that's ultimately, investors' thought process out there of if you can choose not to take advantage of these sorts of opportunities, right? You could choose not to buy Amazon at $100 and $80 a share. You could choose not to buy Meta at $80, $100, $120, $150, right? And take advantage of all the great companies that are heavily discounted. And you can look back in 5 years with massive regret, or you can take advantage of those opportunities and look back and have made a ton of money. It's really up to you, right? And so that's where I think a lot of us retail really comes from, right? Now you look at something like this, right? Man posted this in the private stock group's Discord chat, right? So this was pretty insane, right? Statistically, the bear market we experience or are experiencing is quite the average one, right? Which goes to show you, we've already experienced an average bear market now at this point in time. Now, you could say, well, maybe we're going to have an 08, 09 type bear market where we're going to go down 50% on the index, right? Or like we had in the tech bubble. Certainly always a possibility. Always a possibility, right? But you got to understand that's not average. Those are insane time periods when you get those sorts of drops. So, you don't want to always, let's call it, place your bets on that you're always going to have a tech bubble type crash or you're going to have a great financial crisis type crash because those were freakish events. And that's not usually how this game works. And I think that's just important that everybody keeps that in the back of their mind, that you can't bet on scenarios that almost never happen to happen. It's a very tough thing, right? Now, a major opportunity I see in the market, look at the Russell 2000. In the past 3 years and 3 months for the Russell, right? The index in general is up 5%. In the past 3 years and 3 months. You've got to be flipping my flapjacks. That's incredible, right? But it goes to show you, in time periods of huge volatility, people don't want to take as much risk, right? And so when it comes to smaller cap companies, Russell 2000 type companies, a lot of people view those as, let's call it higher risk, right? These are higher risk companies. We want to own only the most quality of quality companies. The Amazon, or I don't want to say Amazon, right? Because even that one got thrown out a bit the past year. Apple, Microsoft, those sorts of companies, right? And so even a lot of these great small cap companies get thrown out, right? People don't want any piece of them. And that's why you've seen that index go almost nowhere for over 3 years now at this point in time. And so when it comes to an index, eventually it's going to come back to life and it's going to roar and it will ultimately What you'll see play out likely over the next 3 years and 3 months is the Russell catch up to the other indexes and get more in line with those other indexes. Because if you look at the indexes overall, usually they're going to kind of run with each other over a 5-10 year span. They can get way, underperform, overperform in a shorter term period of time, but over the longer term, they're going to usually perform with each other. And so just understand, when volatility calms down, which we're already seeing it calm down, if it continues to calm down, don't be surprised if the Russell starts to outperform over the next several years. I'm not talking about over the next several weeks or months. I'm talking over the next several years, okay? Don't be surprised if that one is an upside surprise. If you get into a more normal environment where, we let's call it just, we're back to normal times, because we have been in anything but normal times, right? Now, important for everybody out there, market is closed on Friday. So if you have any moves you want to make in the market, do them on Thursday, okay? And speaking about moves maybe coming on Thursday, maybe even from me, Palantir stock, okay? Palantir under $8 a share here today. Just barely under $8 a share, under $8 a share nonetheless. But huge news on two different fronts in regards to Palantir today, okay? So first one up here, Palantir expands Microsoft Cloud computing pack to government agencies. Palantir on Wednesday expanded its cloud computing partnership with Microsoft on federal government contracts. Palantir stock fell on the news, but obviously the whole market is down big. In addition, a government procurement arm, FedRAMP, has approved that the Palantir cloud service using Microsoft's Azure cloud infrastructure. This milestone expands Palantir and Microsoft's strategic partnership from the private sector to the public sector, bringing the best-in-class cloud components to the federal marketplace. Now, an analyst on Palantir stocks basically said, "We do not view the Microsoft Azure partnership as significant. Palantir already offered its Gotham and Foundry applications on AWS, Amazon Web Services," okay? So here's my opinion, okay? Probably not the hugest deal in the world, right? By the way, that analyst is a negative analyst on the stock. They have an underperform rating. Not the biggest news in the world, but it is still positive. I can tell you, is this a positive or negative? It's certainly a positive, right? Is this necessarily a game changer for Palantir? I'm not so convinced it's a game changer, but does this matter for Palantir? Absolutely. If you talk about expanding anything with companies like Microsoft, it's good news, okay? It's good news. And so, the fact that anybody would get tied up into, this isn't a big deal or something like that, it absolutely matters, okay? I can tell you that. Would you rather have deals with Microsoft, Amazon Web Services, or not have those deals? Of course you'd rather have those deals, right? So they matter. Even if it's only a few percentage of revenue it helps a year, it's still a few percentage points. It still matters in a significant way for a company like Palantir. Meanwhile, Jim Cramer came out and trashed Palantir today. He said Palantir is not even a real company. What? It's clear Jim Cramer is not a fan of Palantir Technologies. He doesn't even believe it's a quote-unquote real company. Palantir announced an expansion of its partnership with Microsoft Wednesday morning. Following the news, CNBC's Andrew Ross Sorkin asked Cramer what he thought about the expanded partnership as the company as a whole. Quote, "Palantir seems to be a company that's made up for memesters," Cramer said. Whoa! He compared it to C3 AI, noting that both C3 AI and Palantir were bid up by investors and aren't really real companies. Oh, this is, juicy. Okay, Cramer. He complained about CEO Alex Karp's use of foul language on conference calls and noted that if Karp would stop dropping F-bombs, the company would have more legitimacy. Okay. Sorkin seemed to be taken back by his comments. He said, "So you don't think that Palantir is a real company?" "No," Cramer said. "I think that Palantir is a series of press releases." Wow. Sorkin was surprised by his response. "Wow, fascinating," he said. Cramer acknowledged that there is hope for Palantir. Maybe the company will pivot and start focusing on making money so we can assign a quote-unquote real valuation, he said. Wow. This is what Cramer said about Palantir, not even a real company, right? And in all due respect, this is a company that did $595 million of revenue in 2018, $742 million of revenue in 2019, over $1 billion in 2020, $1.5 billion in 2021, and nearly $2 billion this past year, right? Gross profit $430 mil, $500 mil, $740 million, $1.2 billion, and nearly $1.5 billion in gross profit last year, right? And obviously, Alex Karp and the team basically just said that the company is expected to get to full profitability on a yearly basis in 2023 and beyond, right? So I don't know what Cramer's on, in all due respect, in regards to that whole isn't a real company. You might disagree with the valuation. You might say, I think it's overvalued. It should be $5 instead of $7 or whatever, okay? But to say it's not even a real company for a company that's pulling in almost $2 billion a year this past year, right? And has that sort of gross profit, I think is just insane and just disrespectful overall, okay? So, I don't know, man. Kramer says some crazy stuff sometimes, and that was one of those that I was just like, wow, okay. You can say a lot of things about Palantir, but to say they're not even a real company, it's just, that's a little much, okay? A little much in my personal opinion. Let me know in the comment section what you guys think about that. That was pretty wild, okay? Tesla Myasla, right? So this stock has obviously started to come back significantly this year, right? I mean, the stock was bottomed out at right around $100, $101. And I mean, today it's flirting at about $185, right? You can run the percentages on that. It's pretty incredible ROI just this year. But let's not forget, this is a one-year chart of Tesla. So you back it up. This stock's down about 50% in the past year, right? So don't forget, like, if you buy Tesla stock here today, you're basically getting buy one, get one free on the shares, right? You're getting a buy one, get one free, right? And so I think sometimes we see a move off the bottom and people say, oh, that stock's high because it's gone up 50%, 100% or whatever. And people do this with stocks all the time. And I can just tell you, when you've been through a crashing market where stocks fall 50, 60, 70, 80%, whatever the number is, right? You got to understand that likely stocks are still very cheap even after they start rebounding and rebound quite significantly, right? Now, an analyst around Tesla is very negative on the stock. He says it's going to crash big. He basically says that this stock's going to $120, which is 30% plus downside from here. He's saying sell this stock. And the reason he's kind of citing around selling the stock, essentially, for selling Tesla is worries around, obviously, the macroeconomic landscape, interest rates, and many other various things, okay? And so, in my opinion, that Tesla's going to work through that. But sure, if you're a short-term trader, right? Yeah, you got to be worried about every single quarterly numbers, everything, right? That could be going wrong or right for this company. But at the end of the day, for a long-term investor, you've got to look at what's the track record of this company, what's the market share of this company. And I went through the numbers yesterday and showed you guys like just the market share in the United States alone. It's incredible, right? Even though the competition is here, and yet Tesla's just completely obliterating the competition now at this point in time. And so, as somebody that drives a Tesla, I got to be honest, every single time I go out with my Teslas, like, I'm getting more and more questions from folks that don't drive Teslas about my Tesla. Oh, how long does it take to charge that? Oh, how many miles of range do you get on that? Like, just more and more people that don't drive Teslas are asking questions because they're clearly interested in Teslas. You don't go asking a bunch of people a bunch of questions about their cars unless you're at least intrigued enough, right? And the amount of questions I'm fielding from folks, hey, how many people can you fit in that? It's insane. I can't go anywhere without having to field questions about, my Teslas. I'm sure other Tesla drivers have experienced something similar to this as well, which means more and more of the masses are starting to, let's call it, be interested in getting a Tesla now at this point in time, which is very, very important. So you got to decipher, are you a short-term trader with Tesla stock or are you a long-term investor, right? If you're a long-term investor, you got to take advantage of any dips you get out there as buying opportunities. If you're a short-term trader, you got to be, let's call it stressed, because every single number Tesla ever misses or makes or whatever, oh my gosh, they missed by 1% of the vehicles they said they were going to deliver. They missed by 1%, 2%. Oh my gosh, it's the end of the world, right? It's very serious situation for short-term traders, right? For us long, they're like, oh my gosh, are they on the long-term trajectory? Boom. Okay, great. Now, this is one of the most important signs I could ever show out there, right? Tesla's tripled their Austin workforce to more than 12,000 employees last year, right? I think one of the most bullish signs you can ever see from a company is companies that are hiring in a downturn, right? Think about almost every single company in the United States of America, or even in the world, but certainly just think about the United States of America over the past 12 months. What has almost every single company done? Cut employees, right? Cut employees. I mean, I don't know if I can think of any company that doesn't have more employees now than they did 6 months ago or 12 months ago. Almost even the greatest big tech companies have started to essentially fire employees and have less employees now than they might have 6 months ago or 9 months ago. While meanwhile, Tesla's adding employees still very aggressively, which goes to show you, I think that's one of the most amazing things, because it's one thing if everybody's adding employees and it's a time period of expansion, but when you're in a period of contraction and everybody's more worried about cutting employees and adding employees, and you've got a company out there that's adding tens of thousands of employees, more than what they had at this time last year, that's an incredibly bullish sign. And that just goes to show you the demand that Tesla has, right? And what they're doing with their workforce. Absolutely incredible. So ultimately, that's just another reason to be bullish on Tesla, right? Slide it in, pull up for you is when it comes to commodity costs for Tesla, specifically things that, let's say, go into batteries, they've dropped off a cliff. I may have to show you guys that in the future, in a future video. But that you got to remember, like, if Tesla brings down price, there's many commodities that Tesla uses in different products that are coming down in price right now and actually basically experiencing severe deflation. And so, you know, everybody that's expecting margins to fall off a cliff, I'm not so convinced of that. Let's call it that, right? Amazon here today. Amazon's flirting with going back under $100, right? Now, here's my buy targets for Amazon, okay? Anything under $150 a share is a buy for me for Amazon. Under $100 a share for Amazon is a strong buy, which basically is me saying load the boat, okay? That's my load the boat price, anything under $100, right? Anything over $150 for me is a hold, okay? So if, let's say, Amazon today, I mean, tomorrow just flies to $160, which it's not doing, right? But let's say that happens, then it's just a hold for me at that point in time, okay? And so basically that's why I view this year as my ultimate year to just add Amazon stock very aggressively, because I know Amazon's not going over $150 this year. Next year it might, okay? This year it's not doing that. And so I have this entire year to just acquire more and more and more Amazon shares, and I'm using that opportunity because I can tell you there aren't that many years you've ever had where you've really gotten a serious time period to add Amazon shares. Really over this past year you've gotten that, and I think until the end of this year you're going to get that opportunity. So it's really like a 2-year window to add Amazon very aggressively. Outside of that, you had a time period in the great financial crisis. You could add this stock, right? Outside of that, you pretty much got to go back to 2000 through 2002, okay? And basically in 2000, 2001, Amazon stock fell significantly, and you got a great buying opportunity for Amazon stock. And those are really the only time periods that you've had in the past 20, 25 years to have a 1 to 2 years period where Amazon stock was down significantly. We're going through one of those periods right now, and so I'm just using that as like, this is my time period to add this stock. I've never been an owner of Amazon stock until recently, right? And so I'm just gobbling up as many shares as possible here over this next, let's just call it 12 months. And that's just kind of what I view as my price targets and everything in regards to that. The lower the stock is, the more aggressively I'm going to add when it comes to good old Amazing's on, right? Now, the market was so bad today, even ELF on a shelf stock was down, okay? You know how bad the market has to be to push down ELF stock? Incredible, right? And not only that, you got to look at this. Meta, the beast that is Meta. I mean, the stock went down today. Holy smokes, that's no joke, because it was down, okay? 1.5% here today. That's just like, oh, how could that even happen, right? Meta. By the way, in regards to Meta, I got to ask this because I had to sign actually 3 6-figure awards and 1 7-figure award here today, which I was shocked by because that's the most I probably signed in a day since I think it was like 2021. And so I really want to know, like, what stock's making people rich out there? Is it Meta? Is it Nvidia? Like, I'm trying to think, like, because that's pretty shocking to me. I haven't had to sign that many awards in a while. The diamonds, okay, everybody has a diamond. Shout out to everybody that has a diamond award, and then the Big Daddy 7-figure award, man. So exciting. Congrats to the people that made it in there. And by the way, if you're unaware with that, basically everybody that's in the private stock group, private wealth group, whenever you hit 6 figures in the market or 7 figures in the market, you get to apply for a award, and we send you it in the mail and whatnot, free of charge. So it's just something that's kind of cool. Now, the last thing I want to speak about here, and I'm really talking to long-term investors out there, is acquiring assets, right? And all we're doing in the market is just building assets, right? We're building our piggy banks is kind of the way I look at it, right? And each week or each month you're out there buying, and some people buy every single week, some people buy every other week, some people buy every month. It depends on, your situation, right? you're adding to your piggy bank, right? You're adding these assets, and don't get so caught up into the stock and the stock price and these sorts of things, right? You got to understand you're buying an actual company and you're adding more ownership of this actual company that you're putting into your piggy bank, right? So if it's Amazon, right, and you're adding more Amazon, you're becoming a bigger and bigger owner of Amazon Corporation, right? A bigger and bigger shareholder of Amazon Corporation. If it's Tesla, every Tesla share you buy, you're now a bigger owner of Tesla, the company, right? And so you just got to understand and get through these periods of volatility and these crazy markets. And when you get major dips in the market, never fear those. I never fear a dip in the market. You say, oh, what if S&P goes down 20%? Great. I'm going to get incredible buying opportunities, and my SDAL call options will print money to the moon. Okay, so that's kind of my view on that. Never be scared of that. There's nothing to be scared of when it comes to that. If you've got a hedged portfolio, then you really aren't scared, which, by the way, everybody in the private stock group, I'm putting together a beast, basically like a hedge video on all the different strategies you could use to hedge your portfolios if you're interested in that. That should be out in the next 1 or 2 days in there. But nonetheless, folks, if you're hedged, you get to make money on the downside. If you're not even hedged, well, you still get to buy stocks for insanely cheap prices that you just don't usually get. So never fear markets going down. Never fear your favorite stocks going down. You're going to get to take advantage. The only time you have to fear is if you're loaded up on options that expire short term and things aren't quite working out, or if you're heavy on margin, okay? I appreciate everybody joining me as always. Thanks so much, guys. Thanks for being subscribed here. Also, if you want that abundance mindset video, check out the pinned comment down there, folks. That will be to basically, I'll send that over, either text it to you or email it, depending upon how you want it. And also, if you're looking to support my channel, you enjoy the content, and you want to support there, check out the Patreon. You also get to see the moves I'm making, which I am making moves in there in less than 24 hours from now. I appreciate everybody. Much love as always, and have a great day.